Hey, what's up, my beautiful people? It's your boy Devo, so motivational, back with another day trade inspire recap. And man, today we got a good one. Um, W trades. We've been getting a lot of W trades lately, so I hope you guys are seeing how we're getting better each and every single day, how we're learning from our mistakes, how sticking to disciplines, how we're being patient, and these things are paying off. So as I'm doing these things, I hope you guys can learn from them and can apply them because you guys see how I've made the most basic mistakes, the beginner mistakes. Of course, we all make them as we're starting off, right? And I hope you guys are seeing how I'm making these mistakes, how I'm defining my strategy, um, retooling it, making it better, learning from my mistakes, just being more patient, more disciplined, and learning from the things that I'm messing up on, and trying to perfect the things that I'm doing right. I hope you guys are seeing that, so you guys can do it as well. And so, real quick, yesterday I had someone who probably watches the video was telling me, "Do I have a strategy?" And it was hard for me to answer that because I was like, well, I wait for a trend. I wait for my pullback to my fair value gap, to my highest fair value gap. If I'm bearish, my lowest fair value gap. If I'm bullish, and I was like, I mean, is that a strategy? And so that had me really thinking and doing a lot of like soul searching in my trading, because if you can't explain your strategy, you don't have a strategy, and that is clear as day. So that really made me question myself, and that whole day I was thinking about it. I was watching videos on it. I was researching, looking to the charts, like, what is my strategy? And then I remembered supply and demand. So I haven't really even thought about supply and demand in a long time. So that is my strategy: supply and demand, and I hunt liquidity. I look for some type of manipulation. I want to see some type of accumulation, manipulation, distribution, or I want to see a manipulation to sweep out somewhere, and then I want to see like some equal highs or some easy lows or something to target to. So I trade supply and demand, and I hunt liquidity, right? And so this what I'm doing, what I show you today is going to be the fundamental of my strategy. This setup was so beautiful. I had small position size. I only did one contract, so I didn't make much today. But it was such a good and beautiful trade. Okay, so I want to show you guys. We didn't have much news coming out today. I'll show you guys. As you guys know, as I showed you guys yesterday, we didn't have much data coming today, and I'll show you that as well. And then we'll get straight into the charts and show you exactly how I made this trade today, why I took shorts even though we were trending today, what I seen, how I profited, and basically going in depth into my strategy. Because as I said, someone questioned me about my strategy, and I was unsure what to say, and I had to do some soul searching on that. Okay, and so let's get straight into it. So today, data. As you guys know, we didn't have much data. 3-year note auction, 52-week bill auction, API crude oil change. Let's refresh that real quick for you guys. So crude oil hasn't came out, or the 3-year note auction, or actually the 52-week bill auction. That 52-week bill auction should have came out. It's past 10:30 a.m. But I mean, none of that's really important. Okay, so let's go into the news today. News, we don't have much news today. It says U.S. stocks steady as U.S.-China trade talks continue. So yesterday they said that they were going to continue talks. Then Musk public clash with Trump likely calculated, says Morgan Stanley. And that is why when we see good stocks go on sale, we buy, okay? We buy. We dollar cost average. We dollar cost average. And I wish I would have bought more, because as I was telling you guys, when it was dropping, I bought some at 300. I bought some at 290. I bought some at 280. And then I didn't buy none at 270 because it just kept dropping, kept dropping. And then I was like, okay, let me wait, because I'm catching a falling knife. Because it was at a point where I was just catching the falling knife, right? And so I was like, okay, let me wait to see if the market wants to dump some more. And sure enough, after the bell closed, it started rebounding. The next day, it shot up to 290, and since then, it's been on a run. And now Tesla is up to 318. Okay, so let me show you guys real quick. So we had this huge down move, and then as soon after that, we've had nothing but rebound. Okay, and that is just to show you, most of the time, sorry to spit, most of the time things aren't as bad as the media makes them seem. the media makes it seem, most of the time things aren't as bad, right? Things can be bad, but most of the time investors in big money is going to take more of a risk until there's like major bad news, right? So there was bad news, potential subsidies and government contracts being wiped away, right? But it was just speculation, right? They were just arguing, right? And so they did sell, right? But that is when we come in and we start dollar cost averaging, getting these good companies on discount, right? When we seen it at 340, 360 just days before, dropped to 320. So we already thought we were getting a little bit of a discount. Then when it starts dropping to 300, 290, 280, 270, we're getting these discounts, right? And that's when we start dollar cost averaging. And as you know, at the next day, Wall Street starts buying it back up, realizing, not gonna say realizing, but they overreacted, and that is most of the time what the markets tend to do. They overreact off of good news stories or bad news stories, right? If any type of bad news story comes out, the market dips, right? The market tends to overreact to things. So like Tesla was overreacted to, drop like $50 in one day. That was chances for us to buy. I did do some buying. I wish I would have did some more buying, right? Because I mean now it's back up to 320, right? So obviously we wish we would have did some more buying, but we didn't really miss out on the move because now I'm up pretty good. My average cost is 312, right? Because I've just been dollar cost averaging. And when it was dropping, I was averaging, putting even more in, right? And at the point, I thought I was kind of like, I was catching a falling knife. I was like, man, I'm down. Because when it dropped to 270, I was down probably about $60. I wasn't going to sell my Tesla because obviously I feel like that it has big room to run in the future, right? These are like 10-year, my investments are like 10-year plans, right? So I'm just throwing money in, and in 10 years, I believe these investments that I have are going to be worth way more, right? And so basically what I'm trying to say is when you see these companies drop like that and give you discounts like that, you have to dollar cost average. You have to be brave when others are fearful. That is Warren Buffett's master quote. Warren Buffett, the richest investor of all time, the best investor of all time, the GOAT, has said it himself. You have to be brave when others are fearful, be greedy when others are fearful, and be fearful when others are greedy, right? And that goes into the fear and greed index. When the fear and greed index is at extreme fear, that is when you should be buying, because when the market is all the way down, again, I know I've said it a lot, but it's just key, and it just shows you guys how much this is true. When the market's all the way down here, we want to be buying, because then when we're down here, when we're up here, we're up 20%. And obviously this is just ETF. On Tesla, when we're down to 216, Meta, when we're down to 400, Nvidia, when we were down to $90, Palantir, when we were down to $80, right? Now we're up 50-60% on those stocks, right? So that is when you want to be buying, not whenever you're already all the way up at the high. And just, I mean, of course you can profit some, but you're in more of a risk, right? You see what I'm saying? And so that's why we want to be buying when others are fearful, and be buying when others are fearful, and be selling, not pre-selling, but you want to be cautious when others are greedy, right? When the market's just pumping out the wazoo, when it's extremely high, right? That's when you want to be fearful, okay? So I know I went on a little bit of a rant, but now let's get straight into our trade today, okay? Because we just had a banger of a trade, such a beautiful trade. We missed out on some profits because this market actually just like dipped. And now what are we seeing? Real quick, before we get into it, now we have a lot of liquidity lined up, right? Because when it dropped down here, I was like, okay, well now it's going to drop down to this 597 support, right? Let's go to our 5 minute real quick. So let me see real quick. Before I go into my trade, I'm just going to show you guys one thing. So we dropped all the way down right here, right? So you see our take profit all the way up here, right? You see our indicator all the way up here, right? It dropped all the way down here, right? But now that just lined up some more liquidity for us to hunt in the future, right? You see these equal lows right here. It took out this low, but now we got these equal lows right here, and it could drop all the way down, touching this 597, and we have this fair value gap right here. So that is going to be pretty in the future. That is going to be a pretty setup in the future, okay? I'm just calling that right now. That is going to be a pretty liquidity hunt in the future, okay? And so what did I see today? Okay, I'm just going to show you guys what I seen today. And I was going to take a bullish trade and it would have paid off, but I didn't take it because I felt like my returns wouldn't have been as much. And so I was kind of not as intrigued, right? But I still should have took it. I would say that. So when the day started, where did we start? We started right here, right? We basically started in this little range, right? We have this resistance area right here, as we see, is wicking, it's fighting, but it can't really get through there. And so I was like, okay, equal highs, easy liquidity, right? So as we're pumping, right here is where I thought of getting in, right? We pumped up, got bought down, got sold down, and I was like, okay, we created another equal high. That is just beautiful. Beautiful for liquidity, right? Beautiful for liquidity. And so as we're pumping, we pumped through, right? We pumped through, and this is exactly where I was thinking about getting in, right? So right here, we were struggling, right? Pumping up, and we're just created another equal high, right? A wick. So, okay, sweep this out, give me this pullback into this little gap right here, and I'm gonna ride it, right? It did that, and sure enough, if I would have gotten in at this wick, I would have rode it. Believe it or not, I'm just showing you guys what I was thinking, what I possibly was gonna do. My dad is can be my truth teller. I pretty much be talking to him about my trades and stuff. It's always good to talk to someone about this stuff. Even if my dad doesn't know much about this stuff, it's always just good to just let out your thoughts in trading, right? Sometimes. And so look, my return of risk was good, right? But I was looking at the option, and as it was pumping up, so look, I'm gonna be completely honest with you. So right here, it pumped up right here, right, and it broke this high, equal high. Right here, when I seen this candle start to come down, I would have took profit. It would have been about $20 with one contract, right? So I was not very intrigued right there. Like right here, it was 216 for the contract. Up here, it pumped up to two, because I was looking at two contracts. So right here, it pumped up to around, I believe, what was it? I think it was 280. Yeah, I think it was about 260, all right? Whatever. So it wasn't going to be much, right? I would have took profits right here, and then it started playing around, and it pumped up all the way up here, right? I was like, beautiful, okay? Whatever, I'm not going to talk about a should have, could have, would have trade. I'm just showing you guys what I was thinking during that moment, okay? And then so I was like, that's beautiful. You know what I'm saying? That wasn't really the trade I wanted to take, right? And that's why I didn't take it. So what did we do? We swept out all these equal highs beautifully, right? So we're in an uptrend. So why did I short? Devin, why did you short? You're in an uptrend. So in this uptrend, what did we have? In this uptrend, let's go to our 5 minute, because we start from our 5 minute, right? And then we scale down, right? I'm so excited because I've been getting some beautiful trades lately. I'm just so excited with them, right? Because I've been breaking them down. I love every single one of you guys who are sticking with me to the journey, right? So what do we have? We have a little bit of an order block. Not a little bit. We have an order block, right? Because this is where it broke structure to the upside, an order block. And then we have this fair value gap right here. This little fair value gap right here in the 5 minute. So then I scale down to my 1 minute. And now what do I see? Let me delete this order block gap so we can just see everything. So what do I see? Okay, so what I was saying, what I was telling my dad, and I'm gonna tell you guys right here. For a short, I want to see, because if it's bullish, all of this is filled. In the 5 minute, all of this is filled. As you see, wicks into this gap, wicks, everything is filled. The only thing to fill is this fair value gap, and we could potentially touch this order block, okay? Potentially touch this order block and get a reaction, okay? But the only thing not filled is this fair value gap. So I was like, okay, if I go short, because we had the liquidity sweep, we have some trend line liquidity, is why I should have stayed in here, because I was looking at this trend line liquidity, right? A bunch of trend line liquidity right here, right? We have a bunch of trend line liquidity right there, right? And in the bigger frame, we still have a lot of trend line liquidity. Let me show you guys what I see. In a bigger frame, we have all this trend line liquidity, right? So we swept out this low. So that's why in the future, I'm getting kind of excited about this low getting taken down, because we have this low. And if we take this low, we're going to hunt the other low, right? So that's where I see all this trend line liquidity potentially getting taken in the future, okay? I'm not going to say right now. It might be tomorrow, when tomorrow we have a lot of volatility, okay? And so let me just show you guys, because I'm getting a little excited and going back and forth to show you guys everything, right? I'm just very excited today. And so what did we do? Invalidated this fair value gap, right? In our 5 minute, invalidated. Let me just go to my 5 minutes so you guys are not saying, Devin, you're supposed to be in your 5 minute and your bigger time frame. Guys, I do that, okay? I do that. I just had a comment saying that I don't use my bigger time frame. I go for my bigger time frame and scale down to my smaller time frame. So let me just go to the 5 minute and show you guys so you guys don't say that, okay? So we invalidated this fair value gap, right? Beautiful. Invalidated that fair value gap. As I said, there's an order block right here, right? But we closed down so heavy, right? And in my small time frames, I don't really trust order blocks, because in your small time frame, most of the time you're going to get the reaction off your lowest fair value gap if you're bullish, or your highest fair value gap if you're bearish, right? Because the order blocks are mainly your bigger time frame, like 4 hours and dailies. That's what I feel like. That's what I've seen from my most trading experiences. Your order blocks in your smaller time frames are mainly not going to really get touched, right? Mainly it's going to be that fair value gap that has all those imbalance of orders that are going to get filled and push price up, okay, or down, right? So what did I see? Invalidate that fair value gap. Boom. Easy invalidation. Pullback right here. And I was like, okay, some people call this an inverse fair value gap. A lot of people call it an inverse fair value gap. I don't really call it that, right? I just call it an invalidation of this fair value gap, breaking down, pull back into this fair value gap, and that's exactly what I seen, right? And so where did I take my trade at? So I believe that is an inverse fair value gap, but I just call it an invalidation, break of structure, right? And then a pullback into the fair value gap, and then another break of structure to the downside. That's just what I say, another fair value gap. But I know some people call it an inverse fair value gap, okay? So I didn't get in on this one. It dropped down, got bought all the way back up, boom, and this is where I took my trade at, right here. Why? Because this was beautiful, right? And honestly, this is a mitigation block, if we want to be completely transparent. Because what is a mitigation block? Where you have a high, a low, a lower high, a low, pull back into that mitigation block, and another lower low. And that is exactly what happened, right? We can literally put this model, oh man, we can literally move this right here, right? You can literally do that. That's literally a mitigation. Literally, all I had to do was move that pattern over and show you guys that exactly what a mitigation. I went over all of that in my market structure breakdown. Future videos will come out. If you guys need more market structure videos, please comment and let me know, okay? And so that is, let me delete the drawing just so it's not too much. So I got in at this one right here, got in at pretty much like the middle of this candle right here. Why? Why didn't I get on this first one? Well, I mean, I could have, right? I mean, I could have missed the move because it did touch the fair value gap. But normally when we have a big fair value gap like that, remember, the 5 minute, we had this big red candle. So in my 1 minute, I know I have fair value gaps in there. Again, my 5 minute has a big seller red candle, right? So in my 1 minute, you're going to have different fair value gaps in there, right? So that's why it wasn't an A plus to me, because we weren't just trending. I wasn't following basically the trend. And then I didn't have a 5 minute fair value gap to retrace into, then go to my 1 minute. I kind of just had a big 5 minute candle. Then I had to scale down to my 1 minute to see the fair value gap. That's why it wasn't an A plus, but it was still a good trade for me to take. And that's why I only did one contract, because it wasn't A plus, but it was still a good trade to me, right? Still was my setup, still was a very good trade to me. So basically, what did we do? We created another fair value gap because we just pulled back into this candle, right? So that's why I didn't get into it. That is why I didn't get into it. So the 1 minute, we just pulled back into this candle, dropped down, and now we actually created a fair value gap, pulled all the way up, targeted this fair value gap, started dropping, and this is exactly where I took my trade. I'll show you guys. Boom. I had my target at these lows right here, and price shot way past them, and I get kind of frustrated when I cut my winners short. And I got in at the middle of this candle. I had my stop loss, giving these wicks a little bit of a room, and that was about a 1.85 to 1.85 or a 2 to 1.85 to 1 risk to reward, right? So I have my stop loss on the top of these candles, on the top of basically my mitigation block. That is basically what I use my order block and mitigation blocks for, and breaker blocks and your blocks in general. I use them at the top of them for my stop loss, because obviously if it goes past your order block, it's really not going your way, right? And so stop loss on the top of my mitigation block, and then my entry in the middle of this candle. My take profits were these equal lows right here, because we have all these equal lows. Let me put this, I can just use this line. Equal lows all right here, right? And I'm gonna show you guys one more thing. So we had equal lows right here. What did we do? We dropped down in my way, right? And I was excited right here. Then we got bought all the way back. Oh, okay, no, sorry. I got in right here, right? So we got sold down, right? Boom, wicked up, and I actually tried to sell my contract right here. I actually did try to sell my contract right there, but it didn't get filled because it got wicked up so fast. Not selling it just out of fear, but I was like, okay, it didn't completely hit take profits, but it wicked it, and I was like, I tried to sell it because honestly, I'm glad it didn't sell it, because that would have been a rookie mistake. I'm gonna be honest, it would have been a rookie mistake because we took out this one and would have had this one. But when we started getting wicked up, my thing was, okay, if I would have sold it, now I could wait for this pullback into this fair value gap, or into this gap. I don't want to call it a fair value gap because it's not a break of structure. You know, your fair value gaps are only after break of structures. Into this gap and write it down, because now what did we do? And that's why I ended up getting so convicted in this trade, okay? Why? Because when we wicked up, what do we create? Another equal low. So that is easy liquidity to be hunted right there now. That is even easier liquidity, because now we have another equal low. So that's what got me even more convicted in that trade. And I could have added more size, but I didn't want to add more size, right? I'm chasing consistency right now. I'm not necessarily chasing the money. And so far, I am getting very consistent in my trades. And then the money is going to follow, right? And I'll get into how much I made, not too much, and how much I could have made when I was looking at them contracts when they kept falling, okay? But again, we're chasing consistency, and the money is going to come after the consistency, right? So look at this. It got liquidity, and now it's pumping all the way back up. That is just so beautiful. That's how you see the market is a hunter of liquidity, and then it goes into the move and wants to take, like, hunted this liquidity, drop down, hunted liquidity some more, and now it's coming up. People that were, greedy, that had stop losses up here, that didn't take their profits down here, coming up and stomping all of them out again. And that is honestly beautiful. It's beautiful to watch, right? And so what did we see? So we created another equal low, so that's what got us even more convicted. Came all the way up, boom, basically just played around with our entry point. Boom, 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 fell, boom, boom, boom. Stop loss, boom, 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 boom. And let me go to my 5 minute, because that's where I was at when I was looking at profits. Because when I'm in a trade, I don't like to look at my 1 minute, because it's too much anxiety when you're in a trade and you see candles going up and down, up and down. So when I'm actually in the trade, I like to be in my 5 minutes. So I like to be in my 5 minutes to find my setup, go to my 1 minute to get my exact entry. Then I switch back to my 5 minute, just so I have less anxiety in the trade. Because like, if it stops me out, it stops me out. But in my 1 minute, when it's going up, down, playing around, that is just too much anxiety for me when I'm in the trade. And I find it better just for me to be more calm when I'm just in the 5 minute, okay? But when I see it playing around my stop loss, that's when I'll go to my 1 minute and be like, okay, if it stops me out, I want to see a 1 minute candle close and stop me out, okay? You guys know how my stop outs are. I like to see the candle go above my stop loss and actually close, because I don't want to get wicked out and then it go that way, right? So I want to see the 1 minute candle close and stop me out, okay? But when I'm in the trade, I would like to be in my 5 minute. So in the 5 minute, I took profit right around like right here. Why? Because when it dropped down, it actually did get wicked up, right? It dropped all the way down here, and I was letting it ride when it broke, and it kept breaking, and then it started to get wicked up. It started to get wicked up pretty heavy at the moment, and I took my profit plus $40, right? I had the contract for $133. I sold it for $173. And keep in mind, that's just one contract. So I made about 30-40% on that one contract, right? So that is pretty good, right? And it could have been more. And so it started to get wicked up, and so I took my profit because, as you know, I don't want to give profits back because it took out these lows. That was my take profit. If it took out those lows, that's what all I was really aiming for. But I did see all this trend line liquidity, but I thought I was being greedy thinking about all of this, right? But apparently, we wasn't being greedy because it came all the way down to 5.99, and that would have been. I seen the option go all the way up to 240, so I could have made over $100 on that one contract, over 100% on a contract. Remember, that is huge because one contract, $100 is like okay, but keep in mind if I had 100% on that contract, if I had 2, 3, 4, 5 contracts for $700, I would have made $700 back, right? And so remember, it's all about the percentages. I only had one contract, so I made $40. But if I had 2 contracts, it would have been $80. If I had 3 contracts, it would have been 120. But really, let me show you guys my percentage. Just see exact, because I don't know my exact percentage that I had. That is beautiful, man. We've been winning, and we've been very consistent with our trades, and that's what we just love, honestly. We love that more than just, oh, I made this amount of money. So I had 30.08% on that contract. So whatever money I had in the trade, I would have made 30% back. But all the way down here, that would have been over 100% on that contract. You see what I'm saying? So we want to chase the percentage, not necessarily, oh, I only made $40. Because 30% on the contract is pretty good, right? I mean, it was, as you guys see, that was a banger of a trade. I hope you guys understood that breakdown because that was just a banger of a trade, right? And again, we have more liquidity down here that we are going to hunt in the future because look at all this. This is still trend line liquidity. We swept this, but now we just left equal lows down here, and we're going to take that eventually. I don't know when, but it could be tomorrow if we had some bad data coming out and a lot of volatility. We could come down and sweep that out. Use this 5-minute fair value gap right here. We could really come down and use that, and that's looking very intriguing to come down and use that 597 and then continue a move up if we want, okay? So that is looking very intriguing, maybe for tomorrow or more later into the week, or we don't know when, but it's going to come out and get these equal lows. We know price loves to do that, okay? And so again, had that mitigation. We had the sweep of our highs up here, and then we seen our fair value gap on the bullish fair value gap getting validated. And if you guys want to call this an inverse fair value gap, for the bullish, for the bearish, we seen that happen. We're being patient. We took the trade. Entry, our stop loss on top of our mitigation block. Our take profits was our equal lows down there. Shot past them. We wish we would have held it longer, you know what I'm saying? We wish we would have been able to get this whole move, right? But we weren't able to, okay? I'm just going to be honest. We weren't able to. We made $40, but 30% our contract. So, we're happy about it. Even though we only made $40, obviously I wish I would have made thousands of dollars. But I'm chasing consistency, and the money is going to come. Okay, guys, believe it when I say the money is going to come. You guys seen 2 weeks ago I made $560. Last week I made $200. So these 2 weeks I've been profitable. These last 2 weeks I've been profitable. So this week now we're up $40 on the week. We have, I'm not gonna say cushion, but a little bit of cushion, I guess. You know what I'm saying? $40 a cushion. But we're chasing consistency, and so far we're getting it, okay? I hope you guys are sticking with me, and I hope you guys are learning through the journey with me. So, strategy, supply and demand. I want to see some type of liquidity sweep, and then I want to see some liquidity that I'm going to hunt. I want to see a liquidity sweep, and then I want to hunt some liquidity, okay? Or I want to have a supply and demand, and I want to hunt some liquidity right off the bat, because sometimes price won't give a sweep. Sometimes it'll just straight start trending towards liquidity. And so I'm a hunter of liquidity. I do want to see some type of manipulation. So my strategy is supply and demand and hunt liquidity, okay? And so that is pretty much it. Tomorrow we have a big day. We're going to have core inflation rate month to month, core inflation rate year after year, inflation rate, CPI, crude oil stock exchange, gasoline stock exchange. So tomorrow is going to be a very big day, a very volatile day, and a day we are ready for, okay? I love every single one of y'all who are with me in the journey. I hope you guys learned a little bit in this trade recap. We're getting better every single day, and I hope you guys can see that, and I hope you guys are getting better as well with me, okay? I love every single one of y'all who are with me. Remember, guys, stay persistent, passionate. Make sure I get paid, all right? Peace.